Good morning, student. Welcome to accountancy class. Today, we are going to take up one very interesting topic, that is goodwill. We have already heard about this topic, and many of you are familiar to it. But in today's topic, we are going to learn about the role of this concept in partnership business and why it is required in partnership business. After going through this session, you are able to understand the concept of goodwill, the different types of goodwill, and you will also understand factors that affect goodwill and why there is a need for valuing goodwill in partnership. Students, as you know that in every business, there are two types of assets that every business enterprise possesses. One is tangible asset and other are intangible asset. Tangible assets are assets which you can see or touch. And intangible assets are those assets which you cannot see or touch. So, intangible asset, you know, we are counting cash, equipment, machinery, physical plant, property, inventory, etc., etc. But in intangible asset, we have knowledge, brands, trademark, patents, goodwill, etc. And goodwill is also our intangible asset. So, what is goodwill? Goodwill is a good reputation of the business that has been earned by the business over a period of time with their hard efforts. So, this reputation, this good name is very much required to help a business to earn high profits. Let us understand its definition. This definition is given by Spicer and Padler. Goodwill may be said to be that element arising from the reputation, connections, or other advantages possessed by a business, which enable it to earn greater profits than the return normally to be expected on capital represented by net tangible asset employed in the business. So, according to Spicer and Pegler, he said it is that element. Which element? Which is arises from the reputation, connections, or other advantages possessed by a business. So, it is not which is haphazardly created. In order to create this element, the reputation of the business has used, its contracts, its connections has been used, and the other advantages things that he possessed is used. And when this element is created, what happens? It enables the firm to earn greater profit than returns normally. And due to this reputation, connections, and other advantages position, business is able to earn higher profit than the normal profit. So this is the definition given by Spicer and Pagler. Let's understand its meaning. So it is the value of quantifiable assets of a business and calculated at the part of its value when business is sold. It is a value of quantifiable asset. Quantifiable asset means it is a part of those assets which can be measured in money or money worth. It is not like that, like it is not a fictitious asset. Goodwill is not a fictitious asset. Fictitious assets are those assets which cannot be converted into cash. But goodwill is something which can be converted into cash. It is intangible asset but not fictitious asset. So that's why it is said it is a value of quantifiable asset of the business, and it is calculated. When it is calculated, a part of its value when business is sold. So the one thing is very common, why every businessman want goodwill? Because it helps business or any business to earn higher profit as compared to other. Let's check out its features. First of all, it is an intangible asset. As you know, intangible assets are those assets which cannot be seen or touched. But these assets are generating money or money worth for the business. It helps in earning higher profit, as we are discussing, because the firm, those who are enjoying goodwill and having a better reputation than their competitor, they are able to earn higher profit. It does not have existence separate from that of an enterprise. Goodwill and enterprises go parallelly. You cannot separate the goodwill of the business from that enterprises. So both exist parallelly. An attractive force which brings back customer to business. So goodwill is that force because of that, because of the reputation, people would like to come back to you. And this is how you have created relation with them. You have created a good name in the mind. So whenever they feel like having something, they would like to come to you. So it is that force. Let's talk about types of goodwill. There are two types of goodwill. One is purchase goodwill, another is self-generated goodwill. Let's understand what is purchase goodwill. Purchase goodwill. Purchase goodwill is that goodwill for which the firm has paid consideration in cash or in kind. Consideration means in order to have that, we have paid a purchase price that we have paid. This purchase price may be paid in cash or it may be paid in kind. So, whenever in order to purchase the business of someone, we have paid some extra amount to that business, that amount is considered as purchase goodwill. To understand it, let us take one example. Like in this example, ABC Limited acquired XYZ business, right? So ABC Limited is purchasing the business of XYZ. For purchase consideration 10 lakh. And what is the price decided for the purchase of business? It is rupees 10 lakh. What is the meaning of purchasing of business? Because when one firm purchases the business of other firm, so on that day, whatever the asset that firm is having, it will also goes to the purchase firm, and in case there are certain liability, it will also be paid by the new firm which is purchasing it. Similarly, when ABC Limited purchased the business of XYZ Limited, so ABC Limited acquired certain assets. So the asset acquired were valued at rupees 20 lakh. When ABC Limited acquired the business of XYZ Limited, on that day, XYZ had total asset worth rupees 20 lakh. And ABC Limited are required to take up their liabilities also as they are purchasing the business, that come out to rupees 12 lakh. So asset worth rupees 20 lakh and liability worth rupees 12 lakh. So what is the net asset of ABC Limited? Net asset of the ABC Limited acquired were rupees 8 lakh. How it is calculated? Net asset equal to total assets minus total liabilities. So the total asset acquired by ABC Limited is 20 lakh and the total liability they take up were 8 lakh. So the total net asset of ABC Limited on that day is 8 lakh. Now compare this 8 lakh with purchase price. What was the purchase price? But ABC Limited paid rupees 10 lakh. An asset they acquired, net asset, it is of 8 lakh. It means rupees 2 lakh paid for the goodwill. So when purchase price is more than the net asset, it means the extra payment that ABC Limited is giving to XYZ is for the goodwill. And this goodwill is called purchase goodwill. I hope this topic is clear to you. Now let us understand what is self-generated goodwill. Self-generated goodwill is the goodwill which is not purchased for the consideration but is earned by the effort of the partner. So this goodwill is that goodwill for which no consideration has been paid. But this is earned by the firm over a period of time because of their hard work. It is an internally generated goodwill which arises from number of factors. So, whenever any business, running business, wanted to know what is their goodwill, so they can calculate their own goodwill. That goodwill is called self-generated goodwill. It is not purchased by, it is created by the business itself. And this goodwill is affected by number of factors that we will be discussing in the later part. And due to this, firm is able to earn higher profit. And self-generated goodwill is the reason why some businesses are earning high profit and some are earning less. So it is all a matter of self-generated goodwill. Now, why there is a need to understand types of goodwill? Let's see. As we know that there are two types of goodwill, purchase goodwill and self-generated goodwill. In purchase goodwill, it may be recognized in the books of account and shown in the balance sheet. Just like when any asset is purchased, we are showing it into the balance sheet. In the similar way, when you are buying goodwill by making some payment, it will also be shown in the balance sheet. But self-generated goodwill is not recognized in the books of account and is not shown in the balance sheet. AS 26, Accounting Standard 26. Accordingly, intangible asset allow the recognition of purchase goodwill in the books of account. So this type of goodwill is recognized by AS 26 also, and there it has to be written in the books. But self-generated goodwill is not allowed to be recognized as per accounting standard 26. So let's understand what is AS 26. The purpose accounting standard 26. The purpose of accounting standard 26 is to prescribe the recognition and measurement criteria for intangible assets that are not covered by other standard. So AS 26 deal with treatment of intangible assets. How to recognize those intangible assets, how to measure their value of intangible asset. This is what it is contained in AS 26. But according to AS 26, what goodwill treatment should be? So as per accounting standard 26, goodwill is recorded in the books only when some consideration in money or money worth has been paid for it. Now, this is something important. If somebody asks you, what is the provision of accounting standard 26? So this is the line which you are expected to line, right? So goodwill will only be recorded in the books when some consideration in money or money worth has been paid for it. So what type of goodwill are we talking about? Money or money worth. So when some consideration is paid, it is a matter of purchase goodwill. So what is the meaning of goodwill only be recorded? It means by the name of goodwill, entry will only be recorded when some cash or in some kind assets that has been purchased. In the case of admission, retirement, death, or change in profit sharing ratio among existing partner, goodwill account cannot be raised as no consideration is paid for it. What is this? At the time of admission of a new partner, retirement of a partner, death, or a change in profit sharing ratio among the existing partner, what happened? There is no cash consideration paid in cash or kind. Only gaining partner is compensating the sacrificing partner. We are passing only one single adjustment entry, gaining partner and sacrificing partner. But there is no cash payment. There is no asset given for the goodwill. So that's why the goodwill will not be recorded by the name of goodwill. It will be recorded by passing the adjustment entry. So these concepts will be clear to you when we will be doing the numericals. Let's check out the factors affecting goodwill of any business. First of all, efficient management. Efficient management is that management which is able to achieve the organizational objective with minimum wastage of resources or with the optimum use of resources. So all those organizations whose management is quite efficient, they are enjoying better reputation than the organization whose management is not up to the mark. Next factor is favorable location. If the business is located at a very favorable location means where it is approachable, easily approachable to the people, where transportation can easily approach, where buyers and other marketing people can easily approach. So if your location of the business is favorable, definitely it adds reputation to the business. Next, favorable contracts. Favorable contracts means if the business is having good tenders, good agreements to work with, and with good people, right? Successful organizations have given their contracts to the organization. It also adds reputation to the name and fame of the organization. Next is advantages of patent. Patents, you know that it is an intangible asset, and sometime some organization has innovated some new way of designing the things, or they get it patent, they get it registered for their firm only. More the number of patent any firm is having, the more reputation they are adding to its business. Next is past performances. If the business of any organization and the profit earned by them over a past year is good, it also add reputation, or it also add good name to the organization. So if the firm is consistently doing well and earning higher profit, it also add to the goodwill of the business. Next one is nature of the business. Nature of business also decide the goodwill, because if you are a service provider industry and you are providing very good services to the customer, so when the customers are satisfied, they would like to come back to you. So this, if the nature of business is like that, which is providing quality um, quality services, if the nature of business like they are producing on a very large scale, because when they're producing on a large scale with a quality output, so their per unit cost falls, and they are able to provide better services at the least price, so that also add to the reputation of the business. Now, next thing that is very important to understand, why we are studying this concept here, why there is a need for valuing a goodwill. So, in partnership firm, there are a number of occasions when there is a change in the partnership agreement. This change comes because of change in profit sharing ratio, when any new partners admitted, when any old partner retires or die, when any partnership firm wanted to sold his firm, when two or more partnership wanted to amalgamate. Amalgamate means they wanted to close their previous concern, and by pooling their resources, they wanted to create a new organization. And when partnership firm is converted into a company. So these are the number of cases when there is a need for valuing a goodwill. Because whenever there is a change in the agreement in a partnership, there is a two class of partner. One, those who have sacrificed, and one, those who have gained. So goodwill, there's a need for the treatment of goodwill, because the partner who is sacrificing, he wanted to be compensated for the hard work he put up to create a goodwill for the business. So these are the cases when there's a need for valuing goodwill. I hope this theoretical concept of goodwill is clear to you. In the next classes, we will take computational part of goodwill. Thank you.